Now, the market's kind of just to the point right now where they're just kind of holding their breath, waiting to see kind of the outcome of the election, which is now just right around the corner. But as I said, the markets have been positioning for an outcome that they think is going to be the winner. And right now, that looks like to be the market is betting on President Trump for a couple of reasons. Here's what you need to know before the bell this morning. Markets right now have started positioning for an election winner. What we don't know for certain is who that winner will be, but the market is predicting a winner for this election, and we can see this in a lot of the actual trading that's going on in the markets, positioning in certain groups of companies that would benefit from policies that of the president elected that would agree with the policies that they might implement. So let's talk about a few of those. So first of all, the S&P continues to kind of grind its way higher. Really, ever since about September, the market's been on a very nice trajectory, just traveling along this 20-day moving average. Again, that's historically, that 20-day moving average acts as a really good kind of running trend line support for the markets. So when markets are running up, it gets a little too deviated from the 20-day. You get a pullback to that support. And markets have been holding on to that for the last couple of days. Futures are pointing positive this morning. So after a bit of a little sell-off on Friday, we came down, retested that 20-day moving average again on Friday. We're going to bounce off that again, at least at the open this morning. We are on a sell signal, though, which is kind of limiting the upside advance. So again, that's not surprising as well. So we're kind of working off some of this overbought condition. We're on a sell signal, which is limiting the upside. So again, we're kind of in a little bit of a consolidation right now for the markets, not really making much of an advance. But again, there's nothing really kind of going on here. Now, the market's kind of just to the point right now where they're just kind of holding their breath, waiting to see kind of the outcome of the election, which is now just right around the corner. But as I said, the markets have been positioning for an outcome that they think is going to be the winner. And right now, that looks like to be the market is betting on President Trump for a couple of reasons. One, if Trump gets elected, he's promised that he would institute tariffs, which, of course, if I'm a foreign country, I want to get ahead of that. So we've seen very strong flows into the U.S. dollar, storing of reserves. Basically, tariffs would lead to more revenues into the U.S., which, as revenues come into the U.S., that strengthens the dollar. So a big trade here has been, as of late, to get ahead of those potential tariffs by buying the U.S. dollar or buying assets that relate to the U.S. dollar in particular. But the dollar's getting pretty stretched here. So again, this is kind of a little bit of a late trade at this moment. You've already had a very big rally. Markets are stretched and overbought on the dollar here near term. So you could expect a bit of a pullback here at some point. But we've also seen relative flows as of late into financials as a good example. Financials have been doing very well under a Trump presidency. He would be more of a deregulator of restrictions on banking. That would potentially do a little bit better for banks. And so banks have had a very nice rally here. Had a bit of a correction on Friday, but again, very nice rally so far. Now, take a look at technology, also same way here. Technologies have actually been doing a whole lot better here as of late. Nice rally really ever since those August lows. Kind of same thing here. So again, here's the risk to all of this. What if Harris wins the election? All of these trades potentially have to be reversed very quickly for whatever positioning that the markets would take at that point. So again, that's the risk of this. The market is kind of betting on the outcome of election. Not surprising, that's what markets do. Markets are kind of anticipatory about certain outcomes, and they have a pretty good track record of predicting who is going to get elected in presidential election cycles. But again, some of these trades are really kind of stretched and far out there, particularly like on the dollar is a good example. And a reversal of that will certainly weigh on asset prices if Harris gets elected. Keep a watch on oil. Oil's having a big reversal today, back down to support here as well. So again, that's due to easing of tensions basically in Israel-Iran. So that's weighing on oil prices this morning. Okay, so that's what you need to know before the bell.